Africa is a tremendous proof of concept of what we mean by merchant banking. It means financials have a tremendous opportunity. So financial valuations in the equity markets are down 35 to 40% since the crisis, and yet the equity markets without financials are up 35 to 40%. So you have a 70 to 80% valuation difference on 22% of the developed market economy in the financials. The buyers of financial businesses for the last 20 or 30 years have been the big banks. And because of Basel III, because of too big to fail, they can no longer buy. In fact, they're sellers. And there is more supply coming out of the market. As you said, there's 1.4 trillion euros of non-core businesses. These aren't mortgage securities, these are businesses that are going to be sold just from Eurozone banks over the next couple of years. As a proof of concept, in Atlas Mara in Africa, we've acquired 3 banks, and in not one of those situations has there been another bank bidding against us. If we're right on the growth prospects for Africa, then financial services is going to lead them. But in sub-Saharan Africa, the business models are terribly simple. It's taking deposits and buying T-bills. T-bills, mind you, that yield 11, 12, 13, 14%, so it's economically the right thing to do. But the heads of state, the finance ministers, the central bank governors are encouraging lending to consumers and lending to small businesses. And that's how we want to be disruptive. We want to put real equity. We want to have majority positions so we have management control. We then want to integrate the banks that we acquire, banks in the SADC region, banks in the East African community, and banks in the ECOWAS region, particularly from Nigeria and Ghana. And we want to be a positively disruptive force, forcing lending in an environment where due to Basel III, a lot of the European lending and the US lending is pulling out and going back to the home market. Now, that's why we raised equity, not a private equity fund, because we wanted permanent equity. And that's why we have a full management team, and I'm already gushing, but John Vitalo as CEO, Arena McDonald from Standard Bank as CFO, Brad Gibbs driving our strategy, Jyrki Koskello from the World Bank doing all of our acquisitions, Richard Mueller just joined as head of integration. We have a team second to none and really up for this challenge. And there is an investment, but we're able to acquire at very reasonable valuations, at book value, sometimes slightly below, with banks that have double-digit earnings. And these double-digit earnings are coming without a particularly large product set. We're going to develop, specialized lending units, capital markets platforms. We're going to implement technology that will give us better information on credit risk, on currency risk, on both for our customers and for our banks. So it is a serious investment. It's a 5 to 7 year project's the wrong word. It's a 5 to 7 years before we're going to really see the conclusion of what we're doing. It's not a passive investment. It's a very, very active investment.